Right, I think we'll get started now. Will, could you move on to the next slide, please? Fantastic, thank you. Welcome to today's session. We're focusing on R&D tax credits. This webinar is hosted by the Innovation Grant Mentoring Project, which is funded by Norfolk and Suffolk County Councils. My name's Laura Hill, and I'm Project Manager for the Innovation Grant Mentoring Project. Our project's aim is to increase awareness to innovative businesses in the region around research and development funding. Move on to the next slide, please. Please note that the session today is being recorded, and we'll be sending out the link to the recording to everyone next week. I think we've just got a few more in the lobby. We'll just bring those people in. Fantastic, thank you. Okay, right, let's go through the agenda for today's session. Our speakers are Andrew Dahl from Gelder Consulting. Andrew is also one of our expert project innovation mentors, and also Lisa Dixon, a qualified accountant and a founder of Caseron Cloud Accounting. They'll be focusing on what businesses need to know about R&D tax credits and also how to claim. Following this, I'll give a short overview of the Innovation Grant Mentoring Project, detailing the fully funded support we offer and also how we can assist businesses in the region. If you have any questions about the webinar, we'll be having a Q&A session at the end. Please feel free to add questions into the Q&A bar as they arise, and we'll pick these up after the presentations. Fantastic. Right, now I'll hand over to Andrew, who'll lead the presentation.
Thanks, Laura. Okay, so I'm just going to share my screen. So hopefully everybody can now see a picture of Lisa and myself on the screen. So we're going to split the webinar into two parts. I'm going to look at it from the perspective of the business owner or the business, and then Lisa's going to look at it from the perspective of the finance team and what's actually required to put the put claims together. So before we go into the details, just a little bit about myself. I'm a chartered chemical engineer by training. I spent the 1990s running around the former Soviet Union. So there's a picture there of me in Omsk in Siberia in the oil refining industry. And then after that, about 2000, I moved up to King's Lynn, where I was involved in led the management buyout of a company called Sealskins, which I ran for 7 years. It was a venture capital backed buyout, so which I was the MD there as well. After that, I've then set up a consulting company, which was a vehicle to help a number of startup and innovative, fast-moving businesses, and one or two turnarounds as well. As Laura mentioned, I'm one of the Norfolk County Council grant mentors as well. Some of the businesses I've worked with are there. And I'm also chairman of Bury St Edmunds Hockey Club. So when I'm not sitting behind a screen, I'm chasing a ball around a pitch. So that's me. What we're going to do, I think Will's just going to launch a quick poll. I think there's one question maybe gone live already, but he's going to, if you could fill that in when you see the poll, just asking, were you aware of the recent changes to the R&D tax credit scheme? So if you could, and we're going to cover those a little bit more over the next few minutes. So if you could just answer that would be fantastic. So before we go into the details, it's just of the changes, it's worth just explaining why the scheme exists. And it is all about encouraging UK to be at the forefront of developing innovative products, processes and services. So products fairly easy to understand. We've got some pictures, Raspberry Pi, Dysons, and things I was involved with, waterproof socks. So those are easy to get our heads around, I think. The processes is all about developing processes and systems. So things like the World Wide Web, systems for generating and processes for generating offshore wind, and distributing it and bringing it on shore, life sciences processes, IVF, all of these things very, very strong systems that we've put together that are highly innovative. And then finally, services, some examples there: crowdfunding platforms, Deliveroo, Spy Healthcare is all about medical support down the telephone line and virtually. So it's all about innovative products, processes, and services. And the other thing that's important to remember here is that the idea behind this, it's R&D, and R&D, research and development, is to advance scientific or technical knowledge. So we will talk a little bit about whether a project qualifies or whether it qualifies for an R&D tax credit. And they always go back and think, is this a clever commercial idea, or is it going to build on and develop new scientific or technological knowledge? And that's one of the key thresholds that we've always got to think about. But I think we'd all agree that if we move on to the next slide, if we look at the size of it, I think we'd all agree that Britain is at the forefront of innovation in a huge number of fields. And part of that is down to the fact that the government, schemes like this, and Innovate UK grants, which are incredibly driven towards driving this innovation. So if you look at the size of the scheme, this was published September 2024. For the previous year, there were 7.5 billion, that should be pounds, not dollars, worth of R&D tax relief claims filed during that period, which equates to 46.7 billion pounds worth of R&D expenditure in the UK. So it's a big scheme, and it can make a material difference to your business. So next often asked questions is, can I claim? Well, the answer to that, providing that it's innovative R&D, the answer is yes. The size of the business doesn't matter. Whether you're an SME or a large company, you're eligible for it. You will have heard maybe in the past, there were two schemes, the SME scheme and the so-called RDEC scheme, which is Research and Development Expenditure Credit. But essentially that was the large scheme. And the recent changes have merged those two. So we've now got a one-size-fits-all scheme for claiming it, but it covers everything from the small, the small companies, the small SMEs, right the way through to the large corporates. So the other thing is that this program, or the system, is completely sector agnostic. So if you're in finance, fisheries, you can see what the types of industries, but any industry is or sector, providing they're doing research and development, is eligible to claim. So that's who can claim. Now, other common question: what's it worth? What's it worth? Well, it's difficult to actually quantify business by business, but typically, and it depends on your profitability and how R&D intensive you are, and so on and so forth. But my experience has been that in the past, I've anything between 16 and 20% of the costs that I've incurred on R&D projects can be claimed. I think that's going to reduce slightly once we get in. We get going with all the new system, but even if it does reduce, it's still a material benefit to your company. So well worth doing. The benefits are received either as a cash refund, which is particularly useful when you're a startup or pre-revenue. You can build that into your cash flow, or a reduction in your corporation tax payment. So those are the two ways that the benefit can be received. And then the mechanism for claiming is that you submit a claim at the end of the year when you file your annual corporation tax return. So some of the changes that have been made do mean that there is a more rigorous evaluation and more scrutiny by HMRC on the claims, and making sure that they really are research and development. And part of that scrutiny and process is that you need to include an advance notification form. And Lisa will take you through the timeline and process for doing that, but which is essentially notifying HMRC that you will be filing a claim. And then when you do file the claim, there's an additional information form. And I'm going to talk a little bit about that in a minute. Okay. So next question, again, what costs can you claim? When you're submitting these claims, now, what activities can you claim for? And then what costs that you've incurred in doing those activities you can claim for? And essentially, there's a raft of different activities. Some examples that you can see on the left hand, in the left hand box, that you could consider as part of the project. And then costs and expenses on the right hand side. So that can be staff, and that includes staff on costs, NI, PAYE. It includes bonuses, for example, for staff who are engaged in doing the research and development. You can claim subcontractor costs, and you can claim contracted R&D. There are some wrinkles around who is commissioning that R&D and who is taking the risk. And again, Lisa will talk through those a little bit. But software consumables, so that could be prototyping costs, it could be lab consumables, it's materials that you are using in or developing or producing as part of your R&D project. If you're into clinical trials or doing clinical trials, and payments to participants would be included. And you can also claim overhead and indirect costs. The important thing is that those costs are related to and directly can be attributed to the project that you're doing or the research and development that you're doing. Okay, so there's a wide range of costs and activities that are covered. The important thing is that when you are making claims, that you can actually document and verify and prove that those costs are genuine and have been incurred in undertaking the R&D. So you've just answered a poll asking whether you're aware of the R&D tax credit, the change to the regime. So these are being put into place and have been put in place over the last year or so. The scheme was originally introduced back in 2000. I first got involved with it in some of the businesses I was working with in about 2005. And at that time, it was very much driven by the finance department or our accountant, who would put together the tax return or the corporation tax. And before we signed it off, they say, oh, tell me, have you done any R&D, because we might be able to get a tax credit. And so everything was done very retrospective, and you could actually claim for R&D that you'd done in the last couple of years as well. So everything was done very last minute. And the reality was, I think, that there was a view that there was plenty of opportunities to expand the envelope or overclaim, or claim for work that was not actually R&D as defined by HMRC. So that's the basis behind the new changes. What the recent feedback and the changes essentially boil down to, it's really important to plan and think about your R&D, and define what you're going to try and the problem you're trying to solve up front. It's also then really important to estimate what you're going to spend, and most importantly, track the costs and expenses that you incur as you're doing it. And if you do that, then you'll have a much better project, and it will make claiming a lot easier. You will also hear people say, oh, it's not worth doing. I 100% disagree with that. The material benefits for R&D tax credits are still very, very large. The onus, I think, is being put back more onto the planning and making sure that you're documenting and that you are actually doing pure R&D. But if you are doing that, or research and development, if you are doing that, it is absolutely still a massively valuable tool to to improve your or to reduce your costs. So from a sort of the commissioning person or the business manager, the biggest change is actually is to start thinking in terms of R&D as specific projects. And if you think about how R&D starts, my experience has been we start up with a question, which is how do we solve this problem, or how do we find out more about this, because the knowledge isn't there. The knowledge isn't there that we need to solve this problem. Yeah. So it starts with how do we solve the problem? Then ask yourself, are you advancing scientific and technical knowledge? Yeah. If the answer is yes, then start thinking of this as an R&D project. If you're figuring out a commercially clever solution that isn't advancing scientific and technical knowledge, then that is not applicable for a claim. But if you're in doubt, assume that it will be and plan and record the project. Yeah. So, but it is now thinking in terms of specific projects. So that would be one of the key takeaways I'd hope for everybody from this. Yeah. So once you've said, yeah, there's a problem, this is my problem, there's a project, then you're going to need to document and define the area of science and technology. What's the current situation? What is the problem that needs solving? Why there's uncertainty and risk. If there was no uncertainty and risk, you wouldn't need to do the research and development. So you need to explain what that uncertainty and risk is. It wouldn't be research or development, it would be a slam dunk. And then what is the approach you're going to do to solve that problem? So just think about that from the outset. Define a work plan and cost. So put a budget together, work out where you're going to spend. Is it going to be staff? Is it going to be software? Is it going to be consumables, and what that's likely to be? Because if you've defined that at the beginning, then you'll be able to track it more smoothly. And the most important thing then, which Lisa will re-emphasize, is you record the costs as you go and your progress against plan. Okay, so we've talked about defining and documenting each project, putting together a work plans and costs, and then make sure we record the costs as you go. Right. So now just taking you inside how the claim is going to be submitted, because I think this just helps put it all in context. So this is the additional information form that we talked about earlier. So I'm just going to major on the qualifying expenditure in the R&D projects, because the rest of the things are essentially our administrative information. So for each project, or for all your projects, you're going to put together a summary of your costs, staffing costs, externally provided workers, contracted R&D, software, consumable items, and payments to clinical trials. So those are one-off numbers that we will put in, but behind that there needs to be a whole raft of supporting documentation explaining and justifying those numbers. So keep a track of your payroll payments, of invoices, just as you would do on monthly in your monthly reporting. So, and with systems like Xero, it's really easy now. When you make a payment for something, incur a cost, you can use a tracking category or something similar just to keep tabs on what each project is, costs that are being incurred. So you'll see I've expended £33,988 on in total. Now, this is how you input the information on the projects in the additional information form. So for each project, this is the information that you're going to submit. So here's my one project, my sample R&D project, and these are the questions I was taking you through previously. What is the field of science and technology? What's the current state of the art? What's the situation now? The next one, advancing knowledge, is what's the problem we're going to try and solve, or how we're going to improve the state of the art? And then a discussion about the risks and the uncertainties faced, and then how we've gone about doing the project. And so what we're doing here is just taking it step by step and answering those 5 questions, 6 questions that we talked about when we defined in our project, when we defined the project right at the very beginning. So in summary, yeah, try, rather than waiting for the finance team to say, what have you done? Try and define your projects from the outset if you're going to claim R&D tax credits. Track your progress monthly, and then through your monthly management reports and accounts is the easiest way to do it. You should be doing that for everything you do anyway. So just define a project as or an R&D tax credit claim as a project. And the benefits of that are massive. It does mean that we've got much easier and cheaper claim preparation for the finance team. It will help you and make sure you pick up all the costs. It will also mean that your R&D, or should mean that your R&D is as effective as it possibly can be. And obviously the big carrot or pot of gold at the end of the rainbow is the cash refund or a reduced corporation tax bill, which will be material and will still make a big difference to your bottom line and your ability to do some of these projects. So those are the sort of key takeaways from as a business owner that I'd like to, or a business manager that I'd like to re-emphasize. And that is me done. So I'm going to hand over to Lisa now, and she's going to take you through exactly some of the details and the nuances that you need to think about. So over to you, Lisa.
Right, okay, so you should be able to see my screen now.
Yep, it's there, Lisa.
Yep, excellent. Right, okay, so a quick introduction to me then. My name is Lisa Dixon. I am a chartered management accountant. I'm not Suffolk born and bred. I came to Suffolk in 1992 with the intention of training as an accountant and then going back home again to Northamptonshire, but met and married my husband, so I stayed. So my kids were born and bred in Suffolk, but I wasn't. I'm a chartered management accountant. You can see I love collecting qualifications, MBA Prince 2, and I'm also a qualified riding instructor. So that was my first job before realising actually that I was quite traumatically allergic to hay, which wasn't great for a career choice. I founded Caser on Cloud Accounting in 2011, and we are basically a virtual finance team. We do absolutely everything for clients who are in stages of growth. I've built a business that works around my family and myself, and it's built financial freedom, so ticks all the boxes. And we work with amazing clients most of which have R&D tax claims. So it's a really, really exciting time for all. Or actually not so much with all these changes. So what to expect from me? R&D tax credits are quite complicated. The rules have changed, so my slides are quite busy. We have a lot to share in a very short amount of time. So don't worry. I'm not going to talk through each slide verbatim. Each slide is designed to tell the full story or cover a particular point so that you can go back and look at this later. You're going to get a copy of the slides and you can revisit them later and rethink what that means to you as a business. Some of what I say is going to duplicate or replicate what Andrew said, but go into it in a little more detail. So there is a second poll that should be coming up on your screens any moment now. And our second poll should be asking if you are aware of the changes. If you are aware of the changes in tax legislation. Now, I can't see the poll on my screen, but I'm hoping you guys can. So are you able to share the results of the poll?
So 67% have said they're not aware of the recent changes and 33% have said they are.
Excellent. And that's not uncommon. The changes have not really been that well publicised. and they've been done in tranches. So I'm going to show you how that happens, or how that's been happening over the last couple of years. So the first significant change was in April 2021, when there was a cap on repayable credits that applied to small and medium-sized entities. And then nothing happened for a couple of years until April 2023. And then a lot has happened in these last couple of years. So in April 2023, they changed the enhancement rates from 130% down to 86%. So a lot of people panicked and thought, right, this is it, it's not worth us doing anymore. The RDEC scheme, they improved it from 13% to 20%. So then it's better for bigger companies, but not so good for smaller companies. So that made people feel a bit stressed. The surrender value for loss relief, when you cash your actual loss relief in and you get cash back into your bank, changed from 14% to 10%. So that also is not particularly good. And then they included new intensive SMEs rates. So this is people who are massively invest in R&D and probably not making a lot of money or are loss making. So they're probably funded in one way or another. From April 2023, we were allowed to bring in data collection costs, cloud computing costs, and pure maths costs. So this is a big change for clients that are now quite tech heavy in the way they hold and store data, and where you hold it on servers where you previously couldn't include those costs, you now can. For accounting periods starting on or after the 1st of April 23, we now have to pre-notify for new R&D claims, and I'll show you how that works in a little bit. And then, bizarrely, claims from the 8th of August 23, in the middle of a tax year, 1 week into a month, they suddenly introduced the additional information form. And originally, they'd intended to allow or enforce it for people who were filing new claims after the 1st of April 2023, had to, from August 23, they had to provide this new information form. And then they changed right at the last minute to everybody had to provide this information form. So in August 2023, HMRC confirmed that something like 50% of R&D claims were immediately rejected because the additional information form wasn't provided. It was 40% the next month, 25% the following month, and 10% I think it was earlier on a couple of months ago. So people still don't know they need to provide, accountants still don't know that they need to provide this additional information form. One of the biggest changes comes in April 2024, where overseas costs for externally provided workers and subcontractors no longer qualify. And this is a big change. It's made a big difference to our R&D tax claims, or it will do because it's only just come into effect. But so few people seem to be aware of it. And from April 2024, the single scheme, the merging of the RDEC and the SME schemes happened. And again, that's because so many tax years start from 1st of December through to, 1st of January to 31st of December, it's going to affect a lot of people mid-accounting period. So we'll look at that in a moment. Now, the new merge scheme that's in effect from the 1st of April kind of takes the best bits from the RDEC scheme and the SME scheme and pulls them all together. The biggest change is that this is now an above the line credit. And what do we mean by that? So if the RDEC scheme, the tax credit is treated as income, almost like a grant. So it's in the other income line. It looks like grant income in your profit and loss account. For a small entity, somebody in the SME scheme, the tax credit comes in by way as a reduction of your corporation tax account. So it's either a tax refund or a reduction in corporation tax. So the merge scheme is going to pick the best bits of the RDEC and treat it as income. So that's great. It makes your P&L look better. It looks like you're better funded. You've got stronger EBITDA, which is earnings before interest, tax, depreciation and amortization. So it makes your P&L look stronger if you're able to get that tax credit. The tax credit rate is 20%. It's a flat 20%. and I'll show you how that works in a minute, but additional relief is available to loss-making companies and those that are R&D intensive. The big change is that subcontractor fees and overseas subcontractor fees are not allowed. So UK subcontractor fees are allowed, but not overseas. Now, many people who are investing in R&D, especially in the tech or the software industries, are using overseas software contractors. So this is a big change. There's going to have to be a lot of changes written to contracts, considerations about where you employ your R&D resource from. What HMRC are trying to do is provide rewards for people who are innovating with UK tax-paying customers or UK tax-paying entities. So your people need to be on your payroll, or they need to be in the UK charging you for the R&D. Your subcontractors need to be UK based. There is a PAYE cap, so it's 20%, £20,000 plus 3 times PAYE and NIC costs for the year is the cap of your R&D tax credits. So that was brought in 2021 for the small scheme. That stays. And another big change is that there's no subsidised R&D restrictions. So whereas previously, if your R&D was subsidised, you couldn't include that in your R&D claim under the SME scheme. You can under the RDEC scheme, but you can't under the SME scheme. Now you can have subsidised R&D and you can include those costs in your R&D claim. So that's a really positive thing. There is also a change to the way repayments are going to be paid. HMRC aim to repay within 40 days. You have to allow up to 100 days and you're not supposed to chase in the meantime. So they'll just tell you it's in process. Now this change comes in from the 1st of April 2024. So we haven't really seen how it works in practice yet and what the true implications are going to be. But if you've had any involvement in R&D taxes, you can see that this is quite different. Now, there's also a new enhanced R&D scheme. So this is increased benefits for people who are intensely R&D spending a huge amount of money on R&D. They could be techs, they could be startups, they could be knowledge-seeking entities. They'll either be loss-making or they'll be making very little money, and their ability to continue trading often comes from the cash that they receive through the R&D tax credits. Now, there was one scheme implemented on the 1st of April 2023, and the ERIS scheme, which is the new scheme, which is effective on the 1st of April 2024. So we've now got 2 schemes that both last for 12 months, both start from the 1st of April. So if your tax year runs from 1st of January through to 31st of December, you could have accounting periods for R&D claims that cross different scheme periods. So this is going to make the claims a little bit more complicated. The biggest difference is that in the current R&D intensive SME scheme, you're claimable with your post R&D loss-making SMEs whose R&D spend is at least 40% of the total expenditure for the claim period. So what that means is that you may be making a taxable or an operating profit, but by the time you've added your tax credits on for the purpose of your tax return, you're a loss-making entity. So you can have an operating profit but a taxable loss, and you can qualify in the current scheme for R&D intensive, which is where you can uplift by 86% and you can sacrifice at 14.5%. It's quite positive, and it reflects those that are investing highly in R&D. The new scheme, ERIS, has changed slightly. So instead of having an operating profit, you will only qualify if you make an operating loss before doing your corporation tax calculations and adding on your R&D enhancements. So you have to have an R&D loss to qualify, an operating cost loss to qualify, and your R&D spend must be at least 30% of your total expense in that claim period. So whereas an awful lot of people qualify now for the R&D intensive SME scheme under the current rules, the changes that you have to be loss making before you can even think about claiming under ERIS means that many people who thought they would claim now will not be able to claim after. You're going to stick to the new merge scheme. Now, there are also complications for connected companies. So you don't get the enhanced rules if there are connected companies and you've added in those costs, considered those costs as well, and that takes you outside the boundaries. So if you're still making a loss after considering your connected company costs, then you can make an ERIS claim. If not, you don't. Now, because there are so many complications to the ERIS scheme, and because so many people who might previously have qualified for R&D tax credits now won't under ERIS, I haven't gone into a huge amount of detail, and I'm not going to talk about that anymore. Unless somebody has a question, then just, you've got my email and my contact details down below. You can drop me a line afterwards and I can explain it in a bit more detail. Now let's look at a worked example of what the merged scheme will do for you. So say we've got revenue of £1 million, we've got cost of sale of 600, gross profit 400, operating expenses 250. So say we had £100,000 worth of qualifying R&D costs within our overheads, so within that 250k. £100,000 multiplied by 20% tax relief means we get a £20,000 tax credit. So that tax credit goes into our profit and loss account as income. So you see there we've got £20,000 of income, which increases our operating profit to £170,000. We then get taxed at 25% on that operating profit of £170,000. So we've made a net profit after applying corporation tax of £127,500. So you can see how your P&L is strengthened by your tax credit coming in here. Now, what should be immediately apparent is you get the tax credit, but you're also being taxed on your tax credit because it's reported as taxable income. But that's fine. Don't worry about that. In your balance sheet, the other side of the double entry, and you're going to get a copy of this slide so you can ponder over it a bit later. The other side of the double entry is that the provision for your corporation tax sits in your balance sheet at 25%, so that's your 42,500, less your tax credit of £20,000, which means your net tax payable is 22,500. So you're only going to need to pay HMRC 22,500. So this is how the tax credit gives you a cash benefit in delivering an R&D tax return. So it is worth that. Now, I've done two calculations down here to show you the effective tax credit. So our profit and loss, or our operating profit before taking into account the tax credit, would have been £150,000. So 22,500 of net payable tax divided by the £150,000 of operating profit before considering the R&D tax credit would have been 15%. If we look at the effective tax rate after applying the tax credit, it's 13.2%. So both of those, 15%, 13.2%, is better than the corporation tax that we would have paid at 25%. So in this example, you can see how it is still worthwhile doing the R&D tax credit, so long, of course, your costs of getting that R&D tax credit done and worked is not more than the tax saving that you make by applying the tax credit. Now, how does that compare to our current schemes? So this is the data comes from Whisper Claims. Basically what we're looking at is before the 1st of April 2023, we were making anywhere between 18 to 33% actual realised benefit in R&D spend. So that means actual cash saving in the business. It's now moved to somewhere between 15 to 16.2%, depending on the rates of tax you pay, depending on whether you qualify for the ERIS schemes or not. It's basically half what it used to be, but it's still worth making that claim. Now, let's talk a little about the advance or the pre-notification required for R&D tax relief. This is mandatory for first-time claimants or anybody who hasn't claimed R&D tax relief within the last 3-year accounting periods. It's about 10 questions. It's very basic. It's asking for contact details, claim dates, and a very brief summary of the R&D work. And it applies to all accounting periods that are starting from 1st of April 2023. So we're only just beginning to have to think about these now. The impact of non-compliance, simple. You don't notify them, there's no claim. So the actions for compliance, and what I mean by that is you must plan your R&D activities earlier. You must submit the notifications via HMRC's portal promptly. Now, you don't need to do this, your accountant should be doing this. So in real terms, what that means is if your accounting period started on the 1st of January, ends on the 31st of December, you need to have notified HMRC by the 30th of June that you want to make an R&D tax claim. It's as simple as that. You must tell them, otherwise it's simply not going to happen. They'll just reject it. The additional information form is something entirely different, introduced by HMRC to improve transparency and reduce non-compliant claims. It requires much more data, much more information, much more forethought about the data you're collecting and what you are managing in your business. And it's to try and avoid all the fraudulent claims that have been. I mean, the R&D tax credits have been subject to so much fraud and incomplete claims, irregular claims, unreasonable claims. This is going to be mandatory for all accounting periods on or after the 1st of August 2023. So we're already doing these. They're in place. They have been for a while. Required for all claims, no exception. And you have to provide detailed information about every qualifying R&D project or activity, subject to a few criteria, which I'll talk about at the end. The impact of non-compliance, again, no additional information form. The R&D claim in your corporation tax return is simply rejected, and it's as if you'd never put anything in there in the first place, and you have to pay the tax before R&D. Now, if you made a mistake and you forgot to file it, but you've still done this, you can still file it and then refile your corporation tax return as amended return. It's a little bit of an admin process. It's fine. It doesn't take very long to do. So the timeline for this is that if your accounting period ends on the 31st of December, you have to submit your additional information form on or before you submit your corporation tax return. So again, this should be managed by your accountants. You shouldn't need to worry about this, but do be aware it's there. And the deadline for submitting that is 30th of September, unless you're making an amended claim for the prior year. Then you can submit by the 31st of December. So these must be filed on or before. So typically, I mean, HMRC don't know if you filed them 10 hours before or 2 minutes before, but on the CT 600 corporation tax return, you have to check a box to say you've done it. So their system looks for the form, and if it's not there, it's all rejected. So a lot of accountants do them the day before. Most of us do them on the same day, just before. Now, on those, you always submit as early as possible and then save the submission repeat, so the submission receipt. So I'm still arguing with HMRC about one I submitted last August, just after it all came in, and it was still, the systems are still all a bit flaky. I've got the submission receipt. I can prove we sent it. HMRC systems can't file it or can't find it. So a little bit frustrating. The big change is with subcontractor restrictions. And these changes were introduced with the merge scheme and with ERIS. Now, relief is only available to the principal company of the contracted out activity. What was happening before was that the subcontractors were making claims. The contractor who employed or engaged the subcontractor was making claims. So there was a bit of double dipping. And of course, we now aren't allowed to claim for overseas. So now the rules are very, very clear. The contractor, that's going to be you, the person contracting for the R&D, can claim if there is evidence the R&D is intended or contemplated. So you, the contractor, know it's R&D, you take the risk and you benefit from the reward. So it all comes down to who's taking the risk and who pays the price if it goes wrong. And it is subject to the overseas restriction. The subcontractor, the person you are getting to do the work for you, cannot claim where they are contracted to carry out the R&D and will get paid regardless of the outcome. So they're taking no risk. If they take no risk, then there's no reward for them. They can't claim R&D tax credits. Now, there are circumstances where the subcontractor can claim. So if, for example, they undertook some R&D work at their own volition, they took the risk, they didn't include it in their charges to you, then they have a valid R&D tax claim potentially. So top tips for maximising your claim. Now that we know there are all these rule changes for R&D, there are 6 key things that you need to do to adapt to these new changes. First of all, look for as many grants as possible. There are out there. There are some for AI, there are some for innovation in agriculture. You just need to go and find them. You can now explore all available government grants and private sector grants to fund your innovation because there's now no restriction as it's not going to affect your ability to claim. If your contractors are in the UK, try and bring them into payroll. It's not always going to be possible, but the more eligible costs we have in-house, the higher our R&D claim can be. Number 3 is to use UK-based contractors. Prioritise UK contractors who are paying taxes and PAYE in the UK and don't use overseas ones. Now, this is not always, this is the bit that's proven a bit of a bone of contention with some of our clients. The overseas contractors are excellent at what they do. So now we have to consider, because we can't include their costs in our R&D tax returns, is the benefit of having their excellence better than the tax saving? What else do we need to do to manage that R&D claim? The more you can do to strengthen your internal R&D capabilities, train your staff to reduce reliance on external contractors, invest in tools, infrastructure, development methodologies, techniques. The more you can do to bring that capability in-house, the better quality your claim is. The most important one, again, Andrew touched on this, is recording your activities. You must document everything. The cost, the project outcomes, the test results, appoint project champions. There needs to be a technical expert for all or one or each of your projects, depending on who is the best placed technical expert for that. And of course, consult R&D tax specialists. So people like us who are going to help you navigate the changes and make sure that your R&D tax claim is valid. Top tips, again, identify every activity for each project. So this kind of comes down to sort of sprint management or agile management. Include all of your qualifying projects, even if they're small ones. Look beyond product development, so process improvements, prototyping, software developments, they also may qualify. And where you're capturing the eligible costs for each project, you can include, as we discussed before, staff salaries, employers' NICs, overtime bonus, pension, everything is eligible on a staff salary. But typically, you would never have more than 95% of a person applied to R&D. Even if their job is R&D, they will still do admin, tea breaks, making coffee, going to the bathroom, things like that. HMRC would expect you to have accounted for as not R&D work time. It's the same with contractor costs. We never apply more than 95% of those because there may be time built into their contracts to allow for downtime. It's very rare that you would get away with 100% of every cost going through. Consumable software and cloud services, data lists and pure maths costs should all be captured. And again, that needs to be, the clearer you have it in your profit and loss account and your account reports, the easier it is to pick up. And you must report a minimum of 3 projects or the number of projects that make up at least 50% of R&D costs. So you must track everything. So one of the conversations that I have with nearly every client all comes down to the quality of their record keeping. So from my perspective, their management accounts are absolutely squeaky clean. We can justify every penny that goes through their business. But in terms of supporting the R&D claim, we need to make sure that we've properly documented challenges faced, experiments conducted, the outcomes, the clear links between what they're spending in their business and the R&D projects and how they're moving things forward. So keeping all that data, keeping it accessible, keeping it clean and tidy, and making sure that for each project and each phase in each project, we're thinking about where ordinary commercial development stops and qualifying R&D development starts. That's real key. Now, what often happens is people think, I'm building something, therefore my entire project qualifies, and that's not the case. Everything you do still has to meet the base rules for science and technology. So you have to be seeking an advance, you have to be going beyond existing knowledge, you have to be contributing to the overall understanding or capabilities in a field. And you must be addressing issues that competent professionals in the field cannot easily be resolved. So me as an accountant can't pretend that you know, I'm a software developer and I'm doing R&D on software development. Of course I'm not, because I'm not a technical expert in that field. I'm a technical expert in accountancy and in these in the rules and the legislation around taxes, but that is outside the scope of R&D. That would just be commercially clever. So there are some things specifically not included. Social sciences, theoretical research, and HMRC includes routine work such as improving efficiency through existing methods of tools as a specific thing that it excludes. So a practical example might be that we're developing a new machine learning algorithm to solve previously unsolvable problems. So you can see how that fits the technical or scientific definition. What does not qualify is configuring existing software to improve business processes. So cleverly using Zapier to link two systems together that are all off the shelf, not allowed. That's not R&D, that's just being smart. So common pitfalls to avoid. Let me just check my timing. That should be okay. So common pitfalls to avoid. It's understanding what qualifies as R&D, and I think this is the most difficult thing. What is a technical advancement versus what is commercially clever? So commercially clever strategies boost business success. They don't qualify for R&D tax relief purposes because they lack that technological and scientific process. How do I know if it's R&D? There are so many questions that you could be asking, or your team should be asking yourself. And it comes back to these. Are you increasing knowledge in the field of science, engineering, IT, or technology? Did a competent expert drive that project? What failed and why did it fail? How is the work beyond routine data collection, testing, and upgrades? How are you going beyond the capabilities of off-the-shelf software tools or products? Why wasn't this easy? What was uncertain? Why couldn't existing knowledge solve this problem? Where did you overrun and why? And were there unforeseen challenges and increased costs? So if that's where your cost control comes in. R&D projects always overrun. They're always more difficult. They're always more expensive than you think they're going to be. One of the best questions I've heard recently on trying to work out whether this is R&D or not in an organization is, first of all, how are you going above your industry baseline? Second was, what did you achieve that gives you a competitive edge that you wouldn't want your competitors to know? And that was quite clever. That made people think more outside the box about what they were doing that they didn't want their competitors to know, because it would give them competitive advantage. Another common error is repeating the same projects year on year. Just because you made a successful claim last year doesn't mean you've got a successful claim this year. If your baseline knowledge improves, at some point that is normal for you and it's not R&D, because you've solved that technical problem, and that's now your basic knowledge. That's now what you know. That's now embedded in your organization. And then just because you're in an industry that commonly conducts R&D doesn't necessarily mean that what you're doing qualifies as R&D. One of the biggest challenges is where people came for all projects and not just the R&D element of a project. And I see this quite a lot. So commercial projects will have eligible and ineligible phases or sprints or tranches, depending on how you measure it, what you call those sections. So the start of the project, the market research and competitor analysis is not eligible, but brainstorming is. Routine development, standard upgrades or standard improvements, not eligible. There will be a point where the eligible element of your project starts, and that's when the technological advancement starts and the technological challenges are identifiable. They're eligible, absolutely eligible, but you need to know when this is happening. And this is why it's important to track and measure. And when the technological challenge is resolved, that's the point that your project is finished. So you need to track each phase. And then the end of the project, which is the marketing, the optimization, the packaging, the setting the colors, that is all not eligible. It all falls out again. And then there is an exemption for overseas contractors. There are valid exemptions where there are necessary conditions that occur abroad, and if replication of the conditions you need for the R&D is impractical in the UK. So the example that HMRC give is the study of volcanic activity. You obviously can't do that in the UK, so you would need overseas experts and technical experts in those fields, contractors, to study that volcanic activity. Another example might be, the effects of Ebola in Africa, that kind of stuff. Two things that HMRC specifically exclude would be if you're conducting R&D abroad, primarily because it's cheaper, or because you think the skills are not available in the UK. Both of those are explicitly disallowed. That's why we come back to bringing those contractors onto payroll or finding contractors in the UK that will be able to do the work. Although they'll be invariably more expensive, we get more money through our R&D tax claim. So you have to do a little bit of number crunching to see whether it's worth your while to do that. So there should be another poll just popping up. So I can't see the polls. So I'm just going to let William bring that up and explain, give you the results of those if he can.
So the response is split at the moment. It's 50% to 50%.
So 50-50, 50% of people are thinking they probably won't continue to do an R&D tax claim after understanding the changes. I would say have a detailed conversation with your accountant. They're still worth doing. They are a bit faffy, but no such thing as a free lunch, right? So we're just going to put the work in, and we're going to make sure these work effectively for our clients. So that's the end of my presentation. My conversation is all about R&D. Personally, I find it all quite fascinating. It's not daunting. As accountants, it's all a bit nerdy when it comes down to collecting data and analysing data. So we're not frightened of these changes. Just makes it all that more interesting trying to apply them in a way that has a beneficial effect on our clients. So I think, Laura, we are opening to questions now.
Thanks, Lisa. Well, I'm just going to take over and do a quick overview of the Innovation Grant Mentoring Project, and then we'll run to questions at the end. Which we'll just get slides back on the screen. Thanks ever so much, Lisa and Andrew. It's been really interesting. So much information, and I think a lot to take away and digest. But those slides, which we'll send out after the presentation will be really helpful, I'm sure, to guide you through all these changes and what it means for your business. So yeah, so my name's Laura Hill and I'm project manager of the Innovation Grant Mentoring Project at Norfolk County Council. I'm a food scientist by training, and in the past I've secured funding from Innovate UK and managed Innovate UK projects within the food industry. And therefore I really understand the benefits that funding can bring to business and how to secure funding firsthand. I'm now really passionate to support businesses in the region along the path towards securing innovation funding, which is what this project's all about. So we support innovative businesses in the region working towards innovation funding, and we organise webinars as well, and workshops and webinars such as today. So I'd like to take this opportunity to talk to you about the project and the support we provide. Thanks for signing up to today's webinar. I know that many of you will have fantastic innovative business ideas. The Innovation Grant Mentoring Project offers free business innovation support. So if you have an innovative business idea and really want to understand how you can secure that funding into your business and want to accelerate R&D projects and its route to market, and you would really value working and learning from our team of experts, our expert innovation mentors such as Andrew, and also our bid writing coaches that can support you through applications, then please contact us to discuss how we can support your business working towards securing innovation funding. So I'll give you now a bit of an overview of the project and the service we provide. So what is innovation funding? Innovation funding is for researching and developing a new product, process or service. This project supports businesses applying for grants from funding streams such as Innovate UK and other sector-relevant innovation funds. Grants go towards supporting innovative projects and can range from thousands to millions of pounds, which really enables businesses to accelerate their innovation and therefore the route to market. Bids into these competitions aren't easy. They are really competitive and the applications are long and very complex. Therefore, we have a mission. We really want to increase awareness in the region and support businesses on the route to innovation funding and help increase the number of successful applications from businesses within Norfolk and Suffolk, because we know there's so many fantastic ideas out there. So what support do we offer to businesses? Why engage with us? Well, by application, we offer fully funded one-to-one mentoring and bid writing coaching from our team of experts. They have been successful in winning innovation funding as well as writing bids and know what it takes to be successful and win a grant. The mentoring offered is in-depth and we can really help you learn to analyse and write successful applications. So we'll not only assist you with the project you're developing now, but give the skills into your business and confidence to complete future grant applications. The support we provide is really flexible and we can work with you whatever stage you're at towards the route to funding success. And if you're not quite ready to apply for funding, but have a fantastic innovative idea, we can support you with early stage concept support from our mentors, which can then lead on to innovation funding assistance, helping you select the right type of fund to focus on and making sure you're applying for the right fund. The project also runs webinars and workshops focusing on different topics, such as today's session. So moving on, who is our service for? In terms of eligibility, we would be pleased to hear from any highly innovative business based within Norfolk or Suffolk, from any industry sector. Your business must have fewer than 250 employees and a senior team which are open to learning and working from external support. So whether you have an aspiration to start innovating or you already have an innovation proposal, we'd be really pleased to hear from you. And if you've applied into grant funding in the past and not had success, it is a really competitive process. these competition forms are extremely complex, and we can work with you to support you, hopefully, to funding success in the future. So far on this business support service, we've engaged with some fantastic innovative businesses across the region. There really is so much going on. On the project to date, we have engaged with 315 businesses on webinars and workshops such as today. And we've taken 60 businesses have received our one-to-one mentoring or bid writing coaching from our projects team of experts. This has led us to support businesses so far, securing £2.7 million of innovation funding, which is allowing businesses to accelerate their R&D and route to market. And the businesses we are supporting are businesses that might not have even considered innovation funding before engaging with our project. So the project and the service we provide really does give businesses confidence in moving towards innovation funding. So I thought I'd share a short video with you to hear how the project team worked with one of the businesses, Canopy. They're based in Norwich. We supported Canopy with mentoring and bid writing coaching. And then I'm really pleased to say they, following the support, they put an application in with us, with our support, and they went on to win an Innovate UK fund, which was fantastic. So I'll just let you hear from Canopy now for a couple of minutes.
Norfolk and Suffolk Innovation Grant Mentoring, brought to you by Norfolk County Council and Suffolk County Council.
Hello. Hello. My name is Hugo Douglas-Dean. I'm co-founder of Canopy, and I'm also the Chief Marketing Officer.
I'm Thomas Panton. I'm the founder and CEO of Canopy. Canopy.com is all about the buy better messaging. Our whole mission is to make it easier for consumers to understand what a better product is, a better impact product is, and then come and find one central place to buy that product. And on the flip side of that, it's about allowing businesses to relay their green claims in a really transparent and compliant way. We really wanted to just make that whole process much easier to decarbonise the industry, but also just make it easier for consumers to make sort of sustainable living just living.
So as a Norwich-based business based at the Enterprise Centre at UEA, we knew about the Innovation Grant Mentoring project, so it totally made sense to apply as we were looking at Innovate UK funding for the project. IGMP really helped us submit a bid, and that was a really great process to allow us to really shape exactly what the project was that we're applying for. Some really great support for the scheme. We had a mentor and also a bid writing coach. We always looked at Innovate UK as a really fantastic kind of way of getting not only the money, we would like to sort of develop the product, but also the validation and the sort of the prestige of Innovate UK. Looking at IGMP was like a fantastic opportunity to really sort of shape our bid and our call and really like identify all the things that make it really unique and really, really attractive for Innovate UK funding.
One of the things that sort of tags along with that is finding where the value is. They really want to know how you're going to commercialise that. When you come back to the basics, well, where's the real value at? You know, what is the bit that's going to make people go, this is a really exciting project, but also this is something which is going to really help the local economy and the wider global economy as well. When we go and speak to investors and we get asked about commercialisation, it's very, very clear in our heads now because we've written that all out in a really structured, really good storytelling way. Yeah, it's exciting. I would definitely recommend the Innovation Grant Mentoring project. It's been really helpful to us, not just for now, but for future development plans as well. So highly recommended.
Norfolk and Suffolk Innovation Grant Mentoring. For more information, contact econdev@norfolk.gov.uk. Brought to you by Norfolk County Council and Suffolk County Council.
Okay, so I hope you found it interesting hearing from one of our businesses and their experience on working towards innovation funding. So if you have an innovative project in mind and keen to understand how innovation funding might work for your business, please go to our webpage for further details on this support programme and also to register. So we've got here the QR code on the screen, which will take you through to our webpage, and also the link or our team email address. Please reach out if you have any questions about the project. I'm happy to speak to you with you individually about how we might be able to support your business. Okay, so we're now going to move on to the Q&A part of the webinar. And we'll take some questions from the Q&A bar. We'll leave that slide up for during the Q&A section, and now I'll pass on to Will in a moment. So if you've got any questions which you'd like to ask regarding the information provided by Andrew or Lisa today, please add those to our Q&A bar. Or if you've got any questions about the Innovation Grant Mentoring Project and the support we provide, again, put them in the bar. So I'm now going to pass over to William, who'll be leading the Q&A section today. Thank you.
So the first question we have is around eligibility. So what level of innovation is required in order to submit a grant request, a tax credit request?
There really isn't a minimum amount. It all depends on whether it's worth your sort of time and effort. So I did one very recently for a client who is building an app in their business. So that was probably about £10,000 worth of costs, £2,000 or £3,000 worth of R&D tax credit to reduce their tax liabilities. So it wasn't huge, but it reduced their corporation tax bill for next year, so it was worth it for them. And my costs for doing that for them, because with the way we track everything in the accounts, was very minimal. One of the challenges I think people have when they are trying to work out whether an R&D tax claim is worthwhile is trying to understand the actual costs benefit. So how much are you going to get cash relief? How much are you actually going to get as a credit into your P&L? How much is it going to cost you for the extra work that your accountant or tax advisor has to do it? So there are a number of accountants that will work with their clients to do R&D tax credits. And when we do it, because we know your business is so well, we generally are a lot more cost effective than going out to an external R&D tax expert who could charge anywhere between 20 and 25% of the credit that you get from your R&D claim.
Thanks, Lisa. So the next question is on expenditure. So can expenditure from previous tax years be included in any application?
No, it can only be in the tax year for the accounting period that you're trading. Now, if your accounting period is, say, the end of December 2024, you still have time to go back and make a tax claim, an R&D tax claim for year end in 2023. So your accountant will file an amended return, but you can't go back prior to that. So you've got a 2-year window, which again comes back to what Andrew was saying at the very beginning, is plan, understand what you're doing.
Yeah, I mean, I think my comment would be, if you think that you're starting on a project or you've got an issue that is going to take a reasonable amount of cost and expense, then as a matter of course, it's a good idea to plan how you're going to do that, whether it's eligible or not. You know, that's just sensible business management. But if you do record those along, at least define at the beginning what those, ask yourself those 5 questions from that. What is the additional notification form? Then it's sensible to do that anyway. And if the costs are more significant than you expect, or then at least someone like Lisa has got the opportunity to say yes, it's worth doing or not. But if you don't from the get-go, if you don't start thinking like that, then you're never going to have the opportunity to claim.
Yeah, and I think talk to your accountant. Your accountant should be able to help you work out whether you've got a potential claim or not. And if they are not the expert at doing that, they'll help you find someone who is.
So the next question is on the correlation between awards granted to R&DI and then the client subsequently claiming tax credits. Is there any correlation between those two?
So say again, Will, please. Between
clients who claim for grants towards R&D and then subsequently claiming tax credits.
I'm not to my knowledge. I would probably say that the methodology and the thinking behind the two schemes is actually very similar and has got closer. So the approach to put together a number of Innovate UK grants, some number of successful ones. The approach actually is very, very similar. So you're asking yourself the same questions when you're writing a grant application as to when you're doing the tax credit. I think the new tax credit scheme is so much newer that it's going to be interesting to see how it all shakes out, Lisa, I guess.
Yeah, and because there's no restriction on subsidised costs now, it means that, I mean, I'm recommending all of my clients where they're doing something that is remotely R&D-ish to go out and find as many grants and applications as possible, because there's now, it's not disqualified from the small and medium-sized entities R&D scheme. So the more grants you can get in, the better. So, you know, I think we should all be actively looking for grants and R&D. If you're working in that area.
So there's another question here on whether there's a publicly available R&D tax credit claims database to check whether applicants have received claims in the past.
No, because it would be part and parcel of people's corporation tax returns, which is private. So they're submitted to HMRC.
Okay, thank you. Is there any further information which can be given on the distinction between the term used here is clever technology and that between new innovation?
You can Google it and find it on HMRC's website. The definition that I gave you was literally copied and pasted from there, and it does get a little bit complicated. The challenge that you have when you're trying to understand something from HMRC's website is they have like a two-phased approach to the data they provide. You get helpful guides, front-end guides on the website on gov.uk that will give you an overview of what it is. And behind each of those will be manuals. So there are thousands and thousands and thousands of pages of manuals behind corporation tax, income tax, R&D tax. So if you've got the bandwidth and the capacity to go and read into them, just search it on gov.uk. People like me will come to you and try and simplify it as much as possible. So it's a challenge because there's very little sort of clear line. You have to take a view on these things, and then you have to document why you think it is R&D, because it might be that you know, part of your process is a routine upgrade, but to do that routine upgrade you need to go and create some new algorithm, or you need to, you know, have 2 or 3 systems talking to each other and have to go and write code. If you're writing code, it's more likely to be qualified as R&D, more likely, not guaranteed, but more likely to be an R&D cost. If you're using Zapier to join 2 things together, it's not R&D. So there's a common sense approach, there's a technical challenge, and even now I deal with some really high-tech clients, and we still debate, is this, isn't this? How well have we documented it? How much of that project is R&D and how much isn't? Is it 50%? Is it 100%? Is it none because, you know, there was no forward thinking or commercial or technical development advancement in this level? So you can look on gov.uk, you'll get a simple explanation, and then you can drill down into a real complex one, or talk to your accountant.
Yeah, I think the you know, one of the criteria is, you know, is someone who's technically qualified in the field or technically knowledgeable in the field. So if you can demonstrate that you've got people that are technically knowledgeable in the field, and you can explain what the state of the art is and why what you're doing is different from the state of the art, then that goes a long way to and in order to move it forward, are you doing something that is inherently uncertain and risky? If it's obvious, then it's not research and development. If it's not obvious to someone who is technically qualified in the field, then you are very definitely moving into something that is eligible for R&D. The difficulty is that the people that are doing the work or have more knowledge, inherently have more knowledge of what's going on than the people who are scrutinizing the work. But that's the key thing is explaining why why what you're doing is not obvious. It is grey and muddy like all these things at the margins. But that's the very simplistically the definition that people are using, I think.
That's great. Thanks ever so much, Andrew and Lisa. I think we'll draw the Q&A session to an end now. Thanks, Will, for your help there. So we're just about at 1:30, and we said we'd finish at 1:30. So here's our last slide with a webinar feedback form QR code. And if we could just also put a link to that in the Q&A bar, please. Thank you for attending. I hope you found the session useful and helping to demystify around sort of R&D tax credits and how to proceed claiming, especially with the changes earlier this year. So I hope it's been helpful for your business. Would be really grateful if you could put a bit of feedback to us through the feedback form. It'll only take 2 minutes to complete. So yeah, it'd be great to hear from you on that. So thank you very much for attending. We'll bring the session to a close, and we'll send the slides and also the recording from today's session out in the next few days. Thank you very much. Have a great afternoon.